So you've got to really, when it comes to the e-closing, you really can only have one, or else you're going to create a world of hurt for yourself when it comes to the back end and selling and delivering loans.
Greetings, everyone. If this is your first time or you're a weekly regular, welcome to the Mortgage Innovators podcast, where we deliver fresh and hopefully entertaining and fun insights on all things mortgage and the innovation propelling our industry forward. I'm Margaret Chiavini. I'm with Caliber Home Loans, and every Tuesday you can find our rotating group of co-hosts, or what our producers have dubbed the Innovative Five. We all share our own unique connection to the industry. This week, I have my wonderful co-host, Dan from Finance of America. Hi, Dan.
Hi, Margaret. How you doing?
Doing great. It's great to be with you again this week.
Absolutely.
And this week, we have a special guest and a fantastic topic. So it's my pleasure to introduce Ty Cieloha with Qualia. Hi, Ty.
Hi, Margaret. Hi, Dan.
It's great to have you. Qualia is our sponsor, and once a month, we are lucky to be able to visit with Qualia, specifically on some of the neat stuff that they're doing in the innovation and technology space. So our topic for this week is how digital collaboration can help lenders and title agents in working together to make the process better and create customers for life. So we all know that the holy grail in the mortgage industry is the customer for life. And so, Ty, you bring a unique perspective in really helping us understand that piece of it on the closing side. And I know that you wrote a really good blog piece, and the piece was called "Why Mortgage Technology Adoption, Not Investment, is Slowing the Pace of Digital Advancement." So I know our producers are going to go ahead and put the link in this podcast so our viewers can go ahead and read that blog. But would you mind just talking to us a little bit about that, and especially helping us understand what's the difference between adoption and investment?
Yeah, that's a great question, Margaret. And Stratmore did a technology insight study, and they pulled some really interesting data points from that when they looked at the number of lenders that actually had invested, purchased e-closing or closing solutions, and whether that's a hybrid or a full e-close solution. I think 40% of lenders had capabilities to do that, but when they actually broke down and look at the data points themselves, the net adoption, so this is the adoption between both the lenders as well as the users, is only about 16%. And so when you dig deeper into that, you can pull some really interesting points. And Margaret, you hit the nail on the head right there, the difference between technology investment versus technology adoption. So when Stratmore dug deeper, they looked at what are the three, biggest barriers. And the number one was, system and vendor integration requirements, internal IT development capabilities, and the third one was the difficulty of getting LOs to change their processes and behavior. So even though lenders had gone out and spent a lot of money on these e-closing solutions, implementing them is a completely different story, and ultimately that's going to have a massive impact on the closing, so the borrower experience, as well as the back-end operational efficiencies in how the lender is then working with the title company to participate in the closing.
Another thing that you referenced in this blog that I thought was really important for our audience is that it really now is generally accepted that the point of sale is pretty much a commodity. Everybody's got it, everybody's dialed in, everyone's in the groove with that. Well, the e-closing part of it, it's very, I want to say, kind of antiquated. What are your thoughts on that?
Yeah, you made a great point, and I think as the industry continues to evolve and invest, we saw point of sale as a shiny new toy in 2016, 2017. It has since become, I would say, somewhat commoditized. The last year and a half, especially I think with COVID hitting the industry, it really put a lot of pressure on lenders to invest in e-closing, and I think the trend that we're seeing is folks have invested in e-closing solutions, and now over the next few years, they're going to need to figure out, again, how do they implement them? How do they drive adoption? And then, as we transition out of e-closing, looking into the future as to, what are the next potential problems and solutions that we're trying to solve in this industry to help create that seamless end-to-end borrower experience.
Hey, Dan, as we're talking about this,
Yeah.
any perspectives that you have really
Gosh,
as a
I have a
lender?
bunch of thoughts that I'd like to ask Ty. Adoption, totally agree with Stratmore's results, because we've certainly seen that. I mean, we made, like, most of us in the space, we made a full court press, very early in the pandemic stages. You need to go virtual. Customers couldn't get to the closing table. We had porch closings going on, all these crazy things that everybody's heard about at this point. I'd be interested to know, how Qualia maybe takes a unique approach to simplifying that process to make it easy on the settlement agents. That was really the biggest roadblock that we hit. Is we realized how unprepared the settlement agent community and the notaries were to be able to facilitate even a hybrid e-closing. And then, you take a next step with, full e-closing. And we realized, as we tried to roll out full e-closing, how much education, and we really needed to control that process from an education standpoint. And it's not just educating the customer anymore. It's, educating the settlement agent, educating the notary, educating the real estate agent. He's not even sure where to show up anymore. So, I'd love to know your take on how you really look at that from a Qualia and your platform standpoint, and how you're trying to really simplify that process to get more adoption.
Yeah, it's a great point, Dan. And being a system of record for title companies really helps us. We're right there in the center. And so if you just look at closing from a national, from a state, from a county perspective, there's different layers of legislation within each layer right there. So we've really done with our customers, all the Qualia and Reservoir customers, on our side is really help enable them to adopt technology to make it easy in order to have, I think, at the end of the day, we want a great borrower experience. And so whether that is traditional wet signing, whether that is the borrower completing some kind of hybrid or a full e-close, which is actually enabled in some states right now. It's really the education. I think, Dan, you hit the nail on the head of educating not only our title companies, but also the network of notaries, the other folks, and then helping them train and teach both their lender partners as well as the borrowers on what to expect, so they can set proper expectations all the way through the closing.
Yeah, maybe you could just touch on, how do you bring, so maybe talk about how large is the settlement agent network that signed up with Qualia today, and how do you approach bringing on a new settlement agent so that when a lender decides to use your technology, they don't have to necessarily think about some of that education that's already predetermined and set up by Qualia?
Yeah, there's a couple of different things I think right there. One, we've got obviously thousands of partners across the country right now, and depending on which individual state you're in, again, different legislations are going to help drive the speed of adoption right there. Something that we have been doing, I think, that has been really interesting in a different perspective, is we've been actually helping lenders stand up their own title companies. That allows them, especially on refis, to help drive, again, that seamless end-to-end borrower experience, but then create that continuity and not have to go into as much learning right there, because you have your partner or your sister company right there. Obviously, with the industry moving to a heavier purchase market, you don't always have control over that, who the title company and the settlement agent is. So I think, moving forward, it's going to be very interesting to see with lenders that have purchased and implemented e-closing software, if they're going to push their e-closing software on the settlement agents, or the settlement agents that are enabled with a RON enabled and closing solution, if they're going to be the ones driving that closing experience right there. And I think the industry hasn't quite figured out who's really pushing who, but we're starting to see that really come to fruition right there.
That's great. And it's nice because it sounds like that's one of the things that you really do as a partner, is helping the lenders figure out how do you begin to get that collaboration.
Yeah, 100%. It could be something as simple as availability, right? So especially with the refi boom over this last year, working with a title partner that might be your trusted title partner down the road, they may be completely overloaded and they can't hit your closing date. So, using our network, for example, to understand like what the capacities are for each title company in specific zip codes or states or areas. So that way, if you're ready to do a closing and you want to work with a Qualia title or a reservoir title partner, for example, you know that they have the capacity and the availability to actually close to hit that closing date. So that's how we can start to use things like data and machine learning to help drive, overall adoption and better closing. So you're not having these hiccups where last minute they call you and say, hey, we can't hit this closing date on time because we don't have any availability. So just little things that, don't seem huge in the small picture, but when you think about like the effect on the actual closing of the loan right there, has a huge impact.
Absolutely. I mean, it's ultimately getting us to where we're trying to go, which is having the entire process as automated as possible and securing that customer for life. So that's fantastic. Well, Ty, it's always a pleasure to visit with you. Thank you so much for joining us, and we're looking forward to our next conversation in about a month.
Margaret, Dan, thanks for your time, and it was great chatting with you both today.
Thanks,
We'll see you
Ty.
soon.
Have a great one.
You too.
Wow, well, that was a great conversation. Let's continue that conversation on e-closings. And Michael, it's fantastic to have you. Michael from American Pacific.
Thanks for having me.
Absolutely. So, Dan, I know you were sharing that you had a kind of a cool experience today that's very germane to this conversation. Would you share what you talked about earlier today?
Sure. Yeah, I don't know if Ty set it up or not, but I actually had an opportunity to go through his platform, Qualia, as a customer, as a borrower. And, some of the things that I noticed is, just the transparency and seeing really the title process from start to finish and all the different touch points. I was the seller in this case, and I was not planning on attending closing and settlement, and it was still nice to be able to bring that up on my screen and actually see the process going today and make sure everything goes smoothly. And of course, I get my net proceeds check at the end of the day. So it was super helpful. Any tasks and things, typical, very similar to what we would see in a point of sale platform, with documentation, title still needs from you as the seller and or buyer, and really being super transparent through the process. So it was a very clean and good experience.
That's neat. Hey, Michael, from your point of view, on the e-closing side, where do you kind of land with that? What are the challenges? What are the things that you're seeing on that front?
Yeah, a lot of areas for opportunity, I think, that are still being developed along that. I think last year really brought it, to the forefront, with just everybody focusing on, the different variations of e-close, right? Because you have hybrid, you have full, you have e-note, you have e-vault, you have RON, you have all of these things that are tying into that. For us, what we found the biggest, I think, opportunity is really, I think last year and the beginning of this year is going to really weed out, the cream of the crop, because you had all of these e-closing solutions that storm the marketplace at the same time. And what we ran into is like our title partners were like, which one do we use? So getting adoption from the title companies was something that we found a little bit of a struggle, because, I know that we had a conversation with one and they said, we've got 9 different, e-closing solutions. So that means 9 different logins. How do we have our, people logging in and out of 9 different systems with 9 different workflows? Like, there's no way that we can keep up with that when, by the way, we're at the highest volume that we've ever been at in the history of, mortgages. So I think that that's really where the rubber's going to meet the road is, what solution really becomes, most streamlined or most integrated so that a title company can use, the same login across the board or follow a same process regardless of what e-closing system that they're in.
Yeah, that was interesting. We referenced the blog that Qualia did, and we're going to make that available for our podcast listeners. And that was one of the biggest challenges, is that you have a title company, and just as you said, your title company, they have 9 of them that they have to manage. it makes me think about our conversation, I think it was last week, where, picking a vendor and how collaboration and working together is so important, because it can drive all of that, which is the easiest, which will, integrate the best. So that's
Yep.
super important.
Yep. And I think one other thing to that too is, whereas with the point of sale side, you can get a little bit more creative as a company. You can have different point of sale systems. We have our primary one, but we have a couple of other ones that are used in, unique instances where you run into it when you get in, especially as we talk about the full e-closing solution is, depending on your investors or where you're delivering your loans to, you can't have multiple e-vaults. So you've got to really, when it comes to the e-closing, you really can only have one. Or else you're going to create a world of hurt for yourself when it comes to the back end and selling and delivering loans. So, it's going to create a lot more of a unique situation than on the front end, aspects from what I'm seeing.
Mm-hmm.
Yeah, and to that point, I think some of these solutions like Qualia over time, may want to think about how they would integrate with some of these mainstream point of sale systems to really, one of the things that we constantly strive to do at Finance America is make sure that the customer is getting a single experience and eliminating pushing them out to 6 different portals through the process, because nothing's more frustrating than getting a new username and password and going into a platform that you don't even know if you should trust, and then they're asking for very sensitive information. So, my opinion on this is that really the lender should control that experience from start to finish, and each of these parties should really just be plugins into that experience to really create a unified, start to finish transactional experience for the customer.
Mm-hmm. Hey, so it was really interesting what Ty talked about, that the Stratmore study said that 43% of the lenders have invested in the technology, yet only, I think it was, Dan, it was 16% are actually using it. What is, from your point of view, I mean, you guys, you're where the rubber meets the road. From your point of view, what's that process? You invested in it, now use it. What do you think on that?
We've certainly seen that. We're probably right in line with some of those numbers, honestly. We launched hybrid, pretty simplistic process. Some settlement agents still push back. So, and then we tried to roll out, the remote online notary, and that even just created much more friction. I think what we learned is that we really needed to look at all of our customer journeys and touch points and make sure that we were educating along the way, and then we really needed to expand that beyond just the customer. Because ultimately, maybe 3 years from now, this is going to be the customer's decision, and everybody's just going to play along. We're not there as an industry yet, but we need to educate the customer. We need to educate the settlement agent. We need to educate the notary. We need to educate the real estate agent, really along the way. So we have reevaluated all of our touch points and communications. As soon as we identify that a settlement agent and that transaction can go down a e-closing path, whether that's hybrid plus eNote or RON, and then really that journey adjusts based off of what that transaction is capable of, and then ultimately between the settlement agent and the customer, they ultimately make the decision on whether they want to go in person or they want to do a remote closing, and then we push the customer down that path and that transaction. But it's a tremendous amount, much more than we ever anticipated, on really being the driving force behind pushing some of the settlement agents, because we deal with, we're very large in distributed retail and TPO. We deal with thousands of different settlement agents all across the country, and the education and the unpreparedness that we found out from them was pretty astronomical, and we realized that we really had to drive that and educate them.
It almost seems like they're not as motivated to head in that direction.
Yeah, so it's a great little statement there, and I think we focused as lenders, we focus so much on the customer experience. and I don't want to speak badly about the settlement agent community, but I would just say not all settlement agent communities really focus on, making sure that customer experience is great. And really they play such a critical role. I mean, literally is the last step and the most, should be the celebration time. And, I don't know that they're all as committed as lenders to make sure that they're creating, a phenomenal end of experience.
Yeah.
Yep. Yeah,
Michael?
I'd agree with that. I think some of it too comes in that investment in technology. I think as much as the lending side as a whole was a little bit behind the curve on investing in technology, again, in my opinion, I think on that settlement agent side was maybe even on the back end in the lending, side as far as those technology investments. And I understand it too, because when you think about it, a lot of those are more of the mom and pop shops, or franchises off of some of these bigger entities. So as far as the resources, the allocation towards technology, I think that's where it might not always be the first thing that they're focusing on. I think Dan hit on pretty much all of the points that we ran into, as well. I also think a little bit too was the way that it was, even as an industry, the way eClose was marketed last year. Everything that I at least would hear was like, hey, this is the way you need to go because you don't want to be in person more than you have to, so this is going to cut your time down. But at what cost? And so, some of the pushback that I heard even from clients or even loan officers from us is they're like, all right, we're going to charge them this much to cut down 15 minutes or 20 minutes in their closing, but they still have to go sit down and sign. Like if we could do the full, Ron, that's where the real value is going to be. And then, but then, even with Ron, we had to wait for some of the state and local, regulations and municipalities to catch up to it. So it's like, there's people that were like, okay, we're ready. We want to do this. And it's like, ooh, can't do it in your state yet. Or, ooh, can't do it in your county. So it's one of those, I think where we're headed though is because it's become such a big thing. I think the regulation is going to catch up. And Dan said too, around the journeys and the different, toggles. And I think that's where, even as a lender, your investment in technology, not every lender has the ability to say, okay, in this state, we're going to do this workflow. And in this state, we're going to do this workflow. I think we're fortunate enough to work with, large organizations that have that level of technology. But, some of these smaller, companies might not have those types of systems or, teams that can build out, all of these different, if this, then this workflows. So I think it's going to be nice when kind of the country as a whole can really, take that step forward and say, okay, across the board, we're all allowing, we're all allowing Ron, we're all going to accept these things, because then it really allows people to apply it, and that's going to help with the adoption.
Yeah, I mean, down to the county level, right? I mean, we're we're going down to the county level to determine if you can do e-recording and some of those things. So I think that my recommendation is, partner with your closest settlement agents, take small steps. Don't try to bite off more than you can chew. Do hybrid first, then hybrid plus eNote, then the holy grail of Ron after that. And review your journeys and your touch points, and make sure that you're driving the education and training content with whatever platform you're using for each of those e-closing platforms.
Yep. That's great advice. Great advice. Thank you, Dan. Well, gosh, you guys, what a fabulous conversation. Thank you both so much. I mean, this is kind of the blessing of COVID, in that I think everyone is primed to understand that it's important. And so all the steps that you're giving, Dan, what you talked about, Michael, I think the legislative aspect of our business is also going to help us.
Yep.
I'm sorry that it's so dark here. Anyway, so what a fantastic session. Thank you guys so much. I look forward to seeing you next week, where we will have another wonderful topic and be able to share innovative and insightful thinking with our listeners.